Hello traders, hello everyone, my name is Gregor and welcome to our new episode Surfing the Elliott Waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the dollar index, dollar CAD, crude oil, silver and the S&P 500. Last week we have seen US dollars moving firstly slightly to the upside, but then it stopped at resistance despite Fed announcement for tapering, and also on Friday we got quite strong US jobs figures. So US dollar still came to the downside. The most important, of course, in the upcoming months will be jobs. Okay, so if the jobs will keep doing better, of course Fed will say that they are on the right track with the tapering. Now, when it comes to markets and speculations, I think that the US dollar has been recently moving to the upside, actually since start of the year, on speculations that sooner or later Fed will have to do the tapering. Okay, so I think that now when they finally deliver this, that actually market can do the opposite. So in my opinion, there still can be very strong resistance. And when looking at this dollar index chart from last year lows, well, there is actually still a free wave movement, and more importantly we have potential wedge forming here in wave C, or if you want, an ending diagonal in Elliott wave terms. So that's a very strong potential reversal pattern that usually occurs at the very late stages of either of an impulse or corrective advance. So in my opinion, this could be a very strong resistance, especially since we are here at the wave 4 termination point, and also at this spike low from last year. At the same time, we see this wedge moving right into this very important trend line resistance. So for me, turning aggressively bullish here would definitely not be my style, okay? Because as I said, we have three waves up and we have a wedge pattern and we have an important trend line resistance here. And also we have the sentiment which tells me that maybe it's time to be aware of reversals. So ending diagonal may cause some reversal in the trends. Of course, those reversals or top formations may not be easy to call, especially if you're not seeing any confirmation that top is really in place. So what we have to see? Well, the most important would be that we see a drop below this support line. Okay, so broken wedge trend line with a daily close, or even better a weekly close, somewhere around or below 93.50, that would probably the first and important evidence that this market is headed to the downside. Maybe only for a free wave drop, but still it should see some kind of a pullback. So at the same time, we think that commodity currencies could still do much better than the US dollar. Maybe Aussie is slightly different because of recent sell-offs, but I still think that Mexican peso, Canadian dollar, New Zealand dollar are still looking quite good. So if we take a look on dollar CAD here, well, keep in mind that on a daily chart, this on the left is my primary wave count here. We have seen recently a reversal to the downside after retest of this very important pivot point, I could say around 1.3 level. So it's psychological level from where market turned to the downside below this trend line support. So it looks like that there can be more weakness coming. And why I think that that's possible is because if I look at the 4-hour time frame here, notice that this drop from this was from mid of September is actually a very strong one. Okay, it looks like an impulse. It can be maybe even wave C, if we consider this could be a wave B rally, or maybe even wave 3. In either case, there is room for more weakness because those lags should be made by 5 subwaves. So that's a wave 1, you had a wave 2, wave 3, nice wave 4 rally back into this resistance area for 38.2%, around 12450 up to 125 level with only 3 subwaves. So in my opinion, there's a chance that this market will actually see see more weakness here. What's also very important when looking at Canadian dollar is to observe the energy prices. Now, crude oil is still moving to the upside and looks like that there is room for more gains. Now, looking firstly at the daily chart here, you have a very strong uptrend, clearly very tough to fight this, just have to respect that more upside should be seen. But notice that we are in a fifth wave since market found a support here back in August. So fifth wave, yes, it's a final leg in a sequence of this 5-wave rise, but still we are not seeing completed subwaves to make sure that maybe this wave 5 is already coming to an end. In fact, we see some very interesting fib levels slightly higher from current levels. So I think that there is a chance for more upside because if we also look at the 4-hour time frame chart here to see the substructure within fifth wave, well, notice that we do not see completed 5 waves up yet. Yes, maybe some could label this as a completed wave 5 up here, but the important is the personality of the recent weakness that we have seen. Notice that it looks like an overlapping formation within these two trend lines. Plus, you have this 38.2% retracement that was being retested around 78.90 swing support. Okay, so looks like that this was a very important reversal area for crude oil. We are rallying now and trying to break this trend line resistance. So I think that if more upside can be seen in the next few sessions with a potential daily close above 82.65, then I think that fifth wave is underway towards new highs and maybe even towards $90 per barrel later on. Now let's take a look also on silver. Now metals has finally wake up after recent slow price action. So if we look at silver, we've been actually anticipating a rally. Firstly, looking at the big picture here, very strong reversal from 2020 lows, and now looks like that we are consolidating, and also we retested these supports down here. So in my opinion, there is a chance for more upside. And at the same time, when looking at the wave count here, notice that I am observing a flat formation. What is a flat formation? It's a 3-3-5 pattern. So that was a free wave drop for a wave A. That was a corrective rise for a wave B. What is very common for a wave B that is that it moves to a new extreme just slightly to clear out stops before market reverses completely into the opposite direction. And that's something that also happened down here for wave C. We have seen a very similar price action. So in my opinion, this could lead to more strength. After all, we have already broken wedge here. So I think that in the near term, we could recover above $25, maybe even towards 26. And then if we get an accelerating price action like a wave 3, then of course we could be looking much higher later on. Also, if we add to this the head and shoulders bottom formation, it's very important, very basic pattern, and I love those patterns in combination with the Elliott wave principle. What we see here is that this left shoulder was actually a fourth wave here. Then you have a head for a wave 5, and then a breakout out of the wedge that was part of a right shoulder, which was completed on this pullback. And ideally that pullback was either wave 4 of the first 5 subwaves here before market will resume to the upside, or maybe it was already wave 1 or wave A and you will now continue straight to the upside towards, as I said, 26 or even higher after any intraday dips. Of course, for confirmation regarding these head and shoulders targets, you want to see a daily decisive break above this neckline. So a break or daily close, let's say around I could say above $25. That would be probably the most important indication for more strength ahead while the market is holding this recent swing support. What is also interesting about that right shoulder is that this was completed with potential morning star formation here. Okay, so now let's take a look on the final market, which will be the S&P 500. So the S&P 500, it's moving very nicely to the upside after this corrective pullback. So you are now in a fifth wave, but as you know, it's very hard to call any top or upcoming reversals in a very strong market, especially when you are at all-time highs. So even this fifth wave could be maybe part of some larger and extended third wave. So don't try to call a top. We rather just will focus on any potential corrective pullbacks rather than impulsive sell-offs. However, for now, even this fifth wave away from this wave 4 swing low is not finished yet. I think that there can be more upside coming. Why? Because wave 5 should be structured by 5 subwaves. So if we look very closely here at this 4-hour chart, notice that I cannot count completed 5 waves up yet. Okay, that was a very strong move in the middle that also took us above this base channel resistance line, which normally confirms that you are in the middle of wave 3 rather than wave 3, which is typically slow. So here we have an extended price action. I think that's a wave 3, so watch out for more upside after fourth wave pullback here. Of course, I'm not sure from where this pullback will occur, but it definitely could be a very interesting setup after a free wave dip. It could occur from around current levels or maybe from around 4790, okay, or 4800 level. But the important is that next dip, I think, will be part of a corrective advance as long as the market is trading above 4432 and 4450 55. That's actually the area that I will stay bullish and will expect more upside as long as we are trading above these levels. Traders, hope that you enjoyed this video, and again, talk to you next time. Bye.